are. This is The Big Show.
12:54 on The Big Show. Nathan Fisher back with you. Final segment here before we head into a beautiful weekend across the state of Iowa. Talking markets right now, being brought to you by Champion Seed. Brian Hoops joining us with us. And Brian, I can't remember if we've had you on in the last week and a half, but if not, we've got the new Trump administration and lots happening already, and tariffs and everything else going on in the Trump administration. What's the market impact?
There's a lot of things happening. You're right about that. A lot of impact as well for these markets. In fact, maybe an hour or so ago, we had a report from Reuters, which is usually a pretty reliable source, that the tariffs would not be enacted tomorrow. This would be 25% tariffs against Canada and Mexico. And without the tariffs being enacted, they were going to be pushed back a month to March 1. And boy, we see some market positioning because of that. Bean oil went from 100 and some points higher to unchanged to lower on the day, just a matter of seconds. And we also saw feeder cattle come off their highs, but it wasn't long. The White House issued a statement that those reports were false and that there would be tariffs enacted tomorrow, including 10% against China. And boy, that pulled soybeans off of their high. They had tried to rally after lower overnight prices. They were 6-7 cents higher. They're currently trading lower now off of that news. So we've seen bean oil regain all of its gains back and trading up near mid-session type highs after big losses just an hour ago. So it's been a very volatile market, and we are definitely subject to tweets and headlines going forward. So it's hard to get a good handle on the fundamentals and on the news, and that's what you want to trade, and it makes it really difficult for a lot of the traders. We've had a big sell-off in the cattle markets here the last couple of days. Those markets are coming back with a vengeance today, seeing 100-point gains in live cattle, feeder cattle up nearly 300 right now. Those gains in the cattle, when your discount to the cash markets, like the futures are right now, that's usually a bullish sign. When you get premium to the cash, that's usually not so friendly. And that's when we saw that sell-off occur earlier this week, was when we went premium over the futures to the cash. We sold off. Now we're discount. That tells us we probably want to be back on the long side of the cattle market.
Yeah, I was kind of wondering that. I did notice that drop in soybeans, like you mentioned here an hour ago. We've been, almost a dime higher on the day, and now a couple of cents weaker.
Yeah, we're 10 cents off our highs, just like you said, a dime higher, a couple cents weaker. Corn is down, wheat is down as well. So, it's interesting markets. Canola oil and bean oil are trading higher because, in theory, when you put a tariff on Canada, because we import a lot of that product into our country, that would slow down those imports and tighten up the supply. We import a lot of spring milling wheat, but yet Minneapolis wheat is trading 5 cents lower. So what is logical for one commodity may not make a sense for another related commodity, such as bean oil and Minneapolis wheat. We also bring in a fair amount of hogs from Canada. We bring a lot of feeder cattle imports from Mexico, and that border's been shut already because of hookworm, and doesn't look like it's going to open anytime soon. So we'll have a cattle inventory report in about an hour from now, and that's expected to tell us that supplies are tight and unlikely to show any signs of rebuilding that inventory herd, so those supplies remain very tight.
Brian, how do we get a hold of you at Midwest Market Solutions?
Yeah, 417-501-5132 is our number.
Thank you, Brian. Yeah, time flies. Have a good weekend, sir.
You too.
We'll talk to you again soon, and we'll be back on Monday.